Hello, it's Justin, and this video is about how to find the best stocks to invest in. I'm in the financial district in Manhattan in New York City right now, and I just had dinner, so I'm just going to talk about how to find the best stocks to invest in. And there's 5 areas I would talk about. The first is the stocks that the top fund managers and the top investors are already investing in. And since those funds and those investors are so big, you can find them easily. And because by law they have to release their holdings and their investment activity to the SEC, the Securities Exchange Commission, so that information is public. So one website you can find that has all the information compiled with all the top investors and fund managers is Dataroman.com, and that website compiles the investment activities of all those fund managers and the top investors. And yeah, because they're so good, the stocks you pick from the stocks they already picked will be better than the stocks you pick at random when you're just looking at the stock market at random. And it's specifically very easy for non-professional investors to get good at this because the top fund managers are already doing a lot of research in picking stocks. And if you're just picking from the stocks they already picked, they are basically working for you for free. And all of this information is for free. So definitely look at Dataroman.com because they have all that information compiled. The second area I would recommend for looking for the best stocks is Spinoffs. And this is a very good area to look for undervalued stocks because when a company spins off a division or a subsidiary, a lot of research has shown that both the parent company and the subsidiary that was spun off, or the new company that was spun off, do very well in the stock market. And there are several reasons for this. One is there's usually a reason why the company was spun off. And that usually has to do with efficiency and how the business was organized. So when the company is spun off, there's a lot of effort to do that. But once that happens, and because it takes a lot of effort to do that, it usually means there's a big reason why it was spun off and there's a big benefit to spinning it off. And once that happens, usually right afterwards, that child company, the stock goes down a little because those who invested in the original company would sell off at random or sell off without doing a lot of research, the child company, and that depresses the price a lot. So you are having an undervalued company that you can invest in easily because there's so many people who are just selling the child company without thinking too much because they invested in the parent company and they don't know a lot about the child company. Secondly, when a company is spun off, there's a lot more focus in both the parent company and the child company, so both companies do better. And thirdly, when a company is spun off, there's a lot of value unlocked into both companies. Because for big companies that have a lot of different divisions, and especially conglomerates which have a lot of different businesses in the same company, it's very hard for analysts and investors to analyze these companies because they have so many different divisions, and some divisions will do very well and some divisions don't do very well. And it's hard to analyze and give the whole company a good rating when that happens. So when the company is spun off, yes, 5 minutes?
Yeah, I'm saying you want to talk.
Yes, check. Sorry, so when that company is spun off, then analysts can really analyze the individual companies, and that unlocks a lot of value because both the parent company and the child company could be valued higher than they were together, just because now it's easier to analyze an individual company that focuses on just one industry or one business. So the third area I would recommend for finding good stocks is restructurings. And this is another area where it's a special situation for a company, and there's a lot of uncertainty to the restructuring and how it turn out. And uncertainty is good because that depresses stock prices. people are afraid of uncertainty, and when they sell off the company, the stock goes down, the stock price goes down, and usually it's irrational. People are just scared irrationally and don't think too much about what could happen after the restructuring. And since the stock price already goes down a lot, there's not much room for it to go lower. So restructuring is a great way to find good stocks, because these stocks have a lot of risk removed from it because of people irrationally selling it out and depressing the price. So there's not much lower it can go, so the only way it can go is up, or it'll just stay there. So it's a good way to find great stocks. The next area you can find great stocks are mergers and acquisitions. And if you haven't noticed, this list starts from the least risky areas to the most risky areas. And yes, mergers and acquisitions are known as the less risky areas, but compared to the stocks that great fund managers already picked and compared to spin-offs and restructurings, I would say mergers and acquisitions are more risky, because there's a arbitrage when you are dealing with mergers and acquisitions. And how this works is that when a company announces that it will merge with another company at a specific price, that price is usually a lot higher than the current stock price. However, that deal may not materialize. There's a big chance that it will, but there's also a small chance that it won't. And for that small chance that it won't, you'll lose a lot of money. And the money you gain if you do win is usually not that much, because other people also realize that there's a arbitrage between the announced price and the current stock price. And since the announced price that the company will be acquired at is usually a lot higher, everyone's going to beat up the current price until it almost reaches the announced price. So even if you do win, it's not a lot, but if you lose a lot. So I would say mergers and acquisitions are risky. However, most of the time mergers and acquisitions do go through. So let's say if you invest in 10 different stocks that are about to be acquired by another company at an announced price that is higher than the current price, most of the time, let's say 8 or 9 out of 10, those deals will go through and you will make a profit. But for the ones that you don't make a profit and the deal does not fall through, you lose a lot of money. So I'd say for mergers and acquisitions is riskier, but most of the time it does work out. So if you're thinking about that, you should definitely take a look at that and try to do several mergers and acquisitions, because there's a good chance that one or two will not work out. So you need to balance it out with succeeding with all the others. And the fifth and last area where you can find the best stocks that I'm going to talk about today is bankruptcy situations. And this is the riskiest areas, because when a company is bankrupt, it means the company is not doing well. On the positive side, when the company is not doing well, the stock prices are extremely, extremely low. And there's not much lower it can go until it reaches zero, which is complete failure and bankruptcy. So for bankruptcy situations, I definitely recommend you do a lot of research, because these areas these situations are riskier, and if you lose, you could lose all your money. But yet again, the prices are so low, there's not much you can lose. So think about that, but also realize that a lot of bankruptcy situations can be turned around. And if you look for the right stocks, you could find bankruptcy situations that look very promising. And people get very, very scared of bankruptcy situations, so the stock prices are depressed substantially. And even if there's a very, very likely chance that the bankruptcy will be reversed, people will still be scared. So try to find those stocks where it's very likely that the bankruptcy will be reversed. Give me a second. Thank you.
Cheers.
Sorry, I had to pay for my dinner. And yeah, so a lot of bankruptcy situations, like I said before, there's a good chance that it'll be reversed, but the stock price will still be very low because people are scared of uncertainty. So do your research when it comes to bankruptcy. So to recap, you start with the least risky areas to find the best stocks, which is the stocks that the best fund managers already picked. And then the other situations that you could find the best stocks from least risky to most risky are spin-offs, then restructurings, then mergers and acquisitions, and then bankruptcies. So I hope this video helped you, and I hope you enjoyed watching the video, and I hope this inspired you to find areas where you can find stocks to invest in. Thank you for watching. Like, comment, and subscribe, and click the bell notification so you get notified for future videos that may be very helpful for you. Follow me on Instagram where you can DM me, and follow me on Medium where you can find articles that I write about the same topics that I talk about on YouTube. Thank you, and see you next time.